Go. So, good morning. Good morning. Friday the 13th. Scary day for some. I'm going to run over a little bit and show you what we have in store for you this morning. And this is good if you're a new trader or an old trader. So, this will give you an idea of what we're talking about and keep you on good, solid ground when you're trading. There's a bit tongue in cheek, obviously, so bear with me on that one. Can everyone see my screen okay? Great,
Yep.
good. So, I always have a little bit of fun with Jim and mine's nicknames here. So, uh, that's just my English sense of humor. Disclaimer, of course, before, because we are going to be going into the charts and doing setups and everything. So we do want to make sure that you know who we are, how we operate here. We're not calling out trades directly for you guys. We are showing you setups and giving you the input that we have about what the charts look like to us and where those entries might be setting up if the charts do what we think they're going to be doing. Okay, Friday the 13th, as I say, just a little play on words here to see how we're doing. Why is it considered unlucky? Obviously everyone knows the horror movie Friday the 13th, where Jason runs around with his mask on, terrorizing everybody. Most people think it started back with the Bible. Obviously, there were 13 people at the Last Supper. The 13th disciple was Judas, and obviously he was the one that betrayed Jesus, and Jesus was arrested and crucified on Friday the 13th. Bit of fun information here. Tattoo shops often have a Black Friday sales on Friday the 13th. And I think one tattoo shop actually holds the Guinness Book of World Records of how many times he tattooed the number 13 on people over a 24-hour period. So another bit of fun. And might not be unlucky for some. The largest jackpot in Mega Millions history will run today. Don't know what it is. But if anybody wins, give me a little cut because I'm such a nice person. SpaceX is launching a rocket today in Florida, so we hope that goes well. If anyone can pronounce this in one go, hats off to them. But this is what people think is mostly going to bring him bad luck. So Friday the 13th, this paraskedavidiakatriophoba actually means fear of Friday the 13th. But it's not people's biggest fear, but it is right up there in the top 4 with only a couple of percent difference. So Friday the 13th is a real thing for 1/5 of the people here in the United States. But here's the meat and potatoes of today's training before we start looking at the setups and everything. These are 30. They're not so much unlucky, but they're just trading habits that are best to be avoided. And this word here, triskaidekaphobia, actually is fear of the number 13. So let's go through it. If you have any questions, obviously, or you want me to expand on any of this, let me know. And these are pretty much in order. The first one, especially not being prepared to trade. That can mean a lot of things for a lot of people. So there's a couple of you want to have a pre-trading setup, a pre-trading ceremony that you follow, a pre-trading plan. So, I get up when I'm on Pacific time, I get up at 4:30. When I'm on Mountain time, I'm in Arizona. So, our time doesn't change. When I'm on Mountain time, I get up at 5:30. But, my coffee pot is full. Everything's ready to go. The press of buttons. My tea is ready in the cup. everything is ready. My computer's charged, my everything else. So when I come down, I'm ready to go. I do a little bit of exercises first thing to get the cobwebs cleared out of my head, and get the blood flowing and everything. But you want to be in the right frame of mind when you start trading. So if you didn't sleep well, if you're in a bad place, mentally or emotionally, these are reasons why you might not want to trade, because your decision-making process might be impaired. Anything that you think might impair that decision-making process, that might keep you out of discipline, that might keep you from being patient. Sometimes the best thing is just to acknowledge that and not trade at all, or get yourself into a place. Maybe you can meditate, maybe you can exercise, maybe you can go for a walk. Maybe you can do some other things to get your head in the right place to be able to trade, because trading is challenging. And the less obstacles you have in the way to be able to trade profitably or trade well, let's say, it's not always profitable, as we know, the better you're going to be. So I have a pre-trading ritual from the time I get up to before I sit at my desk. When I'm at my desk, I have the second part of the pre-trading ritual is actually looking at the charts. I'm looking at the higher time frames. I'm looking at the trends. I'm looking at the economic calendar to see what news is coming up. On my charts, I put a vertical red line at all the news times so that it doesn't catch me unaware. I don't realize there's something coming up. There might be a good trade set up, but it's only 5 minutes before some big red folder news. And so having that vertical red line on my charts at exactly the time that the red folder news comes out just gives me a visual alert of something to be aware of. So before I touch anything, I'm looking at that economic calendar. My FX book or forexfactory.com are the two we generally use, but you can use whatever one you want. Go in the higher time frames, depending whether you're a scalper, swing trader, intraday, etc. You're going to be looking at these higher time frames. I usually drill down from the 4 hour at the beginning of the week. I'm going to be, on Sunday, I'm usually going to be looking at the weekly to see if there's any big trends and big areas of interest and support and resistance lines. But during the week, I don't do much higher than the 4 hour, then the 1 hour down to the 30. Sometimes look at the 15 if I'm looking for specific areas of support and resistance, or I'm looking for fair value gaps or other types of setups or awareness of certain areas of interest on the charts. Before I go down to the 1 minute, as I'm a scalper, I trade on the 1 minute, but I usually I'm looking at the 5 minute or the 3 minute as added confirmation for me when I'm trading. So that's getting prepared to trade. That's before you even thinking about taking any trade. You have to have all this in place, ready to go. You've got to have your trading plan. I have my trading plan on my corkboard up there. And before I sit down, I do look at that just to remind myself, even though I've been doing it nearly 4 years, just to remind myself always what I'm looking for. What are my entries? What are my exits? Am I looking for divergence? Am I looking for rejection of a line? Am I looking for a signal? What exactly am I looking for to be able to get in and get out? Number 3 is a big one for a lot of people, because trading, you have to be patient. FOMO is fear of missing out. Again, that's impatient. That can often come down here for number 9, late entries. And what that means is that the market has already started moving and you're fearful of missing out on that move. So you get in because you're impatient. If you miss the entry, be patient and wait for the next one. Just like waiting for a bus, just like waiting for a train. If you miss that one, another one will come along. Okay, so be patient when you are trading. That's probably one of the most important things. Looking for the trades to set up instead of waiting for them to set up. So, we don't want to push our entries because we're impatient. Be patient, wait for the trades to come to you. Okay? Another thing is indecisiveness. This comes about very often because you are not confident in your skills, your strategy, and that's number 6 as well. But indecisiveness, the most thing we see is overthinking. And what that is when a trade is setting up, you start overthinking it. You should have already had the trade outline for you. If the charts do this, if the candle does this, if price does this, this is going to be my entry. And then if that entry sets up, you start second guessing yourself. You're indecisive. If you've made the decision, go for it, especially if you're on demo. That's what a demo account is for. But when you're trading on a funded trader account or you're trading a live account, indecisiveness can result in bad trading habits as well, because you're not being confident in your ability, in the strategy, in your trading plan. Number 5, being overconfident. That's something that we see more in men than women. We let our egos get in the way of us, and our ego can come and do some of this other stuff down here, like overtrading, revenge trading, greed, things like that. That all comes from the ego. But what it can do as well is when you are on a run, when you're making money, you don't think you can go wrong. Every setup that you look for and enter goes your way. You start becoming overconfident, and sometimes you can start over trading. You can let me just if you can mute yourselves out if you've joined, because you got some background noise. Thank you very much. You're overconfident. And your ego will get in the way. So you've got to put this, when you're trading, your state should be one of, it should be as emotionless as you can possibly be. You've got to take yourself out of the equation. Okay? You've got to be, you've got to know that any assets with financial values are subject to fluctuations. We're going to try and figure out the directions and entries and exits that we're looking for. But there is a lot of fluctuation. Prices will go up and down. And you will make a profit or you will make a loss. Losses are okay as long as your fundamentals are in place and your stop loss is there, and you know when you're getting in, what your risk is, etc. Okay? So, trading is difficult because there is potential for both profit and loss. And unless you're practicing proper risk management, the profit or losses are not limited. Okay, so that's why we have a strict stop loss plan. It should be in your trading plan, where you're placing your stop loss, why you're placing your stop loss, etc. Okay, lack of confidence again can come from indecisiveness. Lack of confidence is in your strategy, your trading plan, your skills. Look, nobody's perfect. You're going to take losses. The idea is to become skilled enough at this business that your profits outweigh your losses. Okay, so don't let your losses dent your confidence. It's just a natural part of trading. And obviously, in the undisciplined one here, number 7, your risk management, capital preservation, and lot sizes how you trade based on your trading plan is going to keep your losses to a minimum. You got to know how much you're willing to risk, and what your target is, so that you can stay disciplined. And discipline and consistency and patience are the backbones of good trading. You have to master those. Greed again comes in from ego. You get over trading. And what that means is, you're making money, you want to make more money. You had a run of good trades, so you're going to take a lot more trades. Don't do that unless they meet your trading plan criteria. Sometimes we take a lot of trades because they're setting up perfectly, and we're going to take those trades, but it doesn't last forever. You can't keep over trading all the time. It was a big issue for me when I first started. As Jim knows, I was always over trading. Revenge trading is, again, when you become undisciplined, where you are trying to get money back that you've lost. Look, if you lost some money and you've been practicing proper risk management, have your stop loss in the right place, just move on. We all take losses. It's no big deal. Don't revenge trade and think you have to get those losses back. Once that loss has been taken, you've got to put it out of your mind and move on. The next trade is a trade on its own with no history based on what you just did. There might be a little bit of history if you're trading the same instrument and you're looking for the same kind of setups that you were. But in your head, in the money, in the profit, in the loss, that part you've got to put aside completely. Early or late entries. Make sure you understand your entries. A lot of people, when we go through a support line or resistance line, will start taking profit straight away. Very often, we want to see a pullback to that line to make sure that that line is holding, then a rejection off that line. That is usually a better area to get in. Sometimes it's not. If other things are showing you that this is just going to carry on going up, then it might be the case. And if you've got out, only go in again if you've got a clear signal, a clear indication that that entry is at the right time. So sometimes we get early indications, but very often that early signal, that early indicator, might just be telling us that, look, this is about to set up. Doesn't mean that it has set up. So very often you think, I want to catch this whole run up. Let's say you want to go long. Sometimes you'll get an early entry there and it will pull back, and it might even pull back and hit your stop loss, which happens to all of us, and then take off. And that's very, very frustrating. You know it was going to take off. You got in, you entered it, you put your stop loss in, but guess what? The market knows where all those stop losses are, so it's going to come down and wick your stop loss out and then take off without you. Very often, a wise strategy, instead of enter at your perceived entry, mark up where your stop loss would be on that entry, and then wait for the actual market to come down to your stop loss and enter there. That often is on the pullback, and then you can put your stop loss safely below that and then ride it up. FOMO is a big one for everyone, fear of missing out. It's already taken off. You think it's going to go to the moon, so you want to jump in. Again, that's a late entry in many, many cases. It's going to reverse. It's not going to hit my take profit. One of the big things that a lot of people do is they will take their profits early. If you see how disciplined Jim is in setting up his long position tool on the charts, or short position tool, so he knows exactly where his entry is, exactly where his stop loss is, and if he's going for a risk reward of 1 to 2, he knows exactly where that TP is. Then you can manage that trade, and you only get out when there's either a clear signal to get out, meaning that it's actually not going to hit your take profit, or you're trailing your stop loss and it pulls back a little bit, hits your stop loss. That's fine. If you break even and you're in profit, that is fine. But one of the big things that I see people is they want to take their profit, no matter how small it is, because that satisfies their ego, where they can actually say, I've taken a win, I've taken a profit, and that's good for the ego. The fact of the matter is, it's not good for the ego if you left a lot of profits on the table. It's much healthier to get as much profit as you can from that thing. And you'll notice Jim, he'll put a 1 to 2 TP on there, but if he feels it's going to run further, he will carry on running it. He doesn't just automatically take that TP at a 1 and 2 risk reward. If he sees the markets are going to continue, he'll go 1 to 3, 1 to 4, 1 to 8, 1 to 10, 1 to 12, whatever it might be, as long as the charts are telling him that that's where it's going to be. And that runs into number 11, obviously, is getting out too early or getting out too late. Getting out too early is exactly what I explained there, is it's carry on running, even if you think it was going to hit a certain level of support, certain level of resistance, a certain level that showed some resistance on higher time frames. Doesn't mean you have to get out there, but you do have to have your finger on the button, because if it does reject off that support resistance line, better to get out then than wait for it to go back and hit your stop loss. And getting out too late, what that means is you think it's going in one direction and it doesn't, it's going against you, but in your heart it's going to turn around. In your heart it's going to turn around. So you hold on to that losing trade. You might even add another position to that losing trade because you're absolutely convinced it's going to turn around. That is not healthy. The best way is to get out of that trade, and then if it does turn around, it might drop another 10, 20, 50 pips before it turns around, then just re-enter. And you can say, yeah, I knew it was going to go up. I just got in a little bit early. The market wasn't cooperating. I am getting in now, and I will follow that up. And the last thing, number 13, is your follow-up. And the follow-up is journaling. We covered that in the traders chat. I believe Jim popped a Excel spreadsheet in there for people who want to journal on a... Oh, Sargon, if you could mute yourself out, please. So journaling is very, very important. And back testing, when you're finished trading, go back, look at your journal, go back and back test it. If you've got any ideas about when you should have got in but you didn't, go back and back test that stuff. See what the reason was, why you got in, what happened to it. If you were indecisive and you saw a setup and didn't get in, go and back and look at what happened if you had got into that trade, and then you can get a much clearer idea. That follow-up is really, really essential to your continued success in the future, because if you don't know what you did right and you don't know what you did wrong, you can't correct what you did wrong, and you can't continue doing what you did right. So journaling and back testing is vitally important. And that's it for now. Now we're going to go, and I'm going to stop stop sharing that screen right now. And we're all back. Let's see if there's any questions before I go on to the next. Do you want to do your bit first, Jim, on the indices, and then I'll wrap it up with gold and crypto?
Yeah, sounds good.
All right, my friend. Let me. Hopefully, you've got control. And you can share your wisdom with us. Ooh, look at that.
All right, this is US 30 here. And what I like to do when I come onto the charts is, of course, I like to mark up a few areas of interest, take a look at higher time frames, Start from the 4 hour, go down to the 1 hour, go down to the 15. Okay. So on the 4 hour here, I look at areas that are kind of within, maybe 500 pips in either direction. And if the market goes beyond those areas, then I'll go back and do some more analysis and see what else there is in that direction. And so I have a trend line here that I've marked up, and then I had a Asian low marked up before the New York Open happened, and then I have this area down here, area of interest, not anything real specific. I couldn't find a specific order block or anything that was unmitigated over here. So this is not a very specific zone for me, but it's just an area that I would pay attention to if price started to come down to here. I would not take any sells directly into this area. And if I was already in a sell, I would definitely be making sure my stop loss was trailing tightly once I came down into this area. And then if we happen to break through this area, then I would, read, do some more analysis and see where is the next area that I think price could come down to, which based on this 4 hour chart, probably would be somewhere down here in this wick. One other thing to note that I don't think we've talked about too much here is that we've talked about how on the 1 minute chart, this primary trend line can act as an area for rejection. So the same holds true on all the time frames. Okay, so it is a good idea to look at the next time frame up, and of course there's time frames for every time, right? There could be a 2, a 3, a 4, or 5, but keep it simple. I like to look at the 1, the 5, the 15, and so forth. So if we look at the 5, we see that we have the primary trend line here. Okay, and then if we look at the 15, we got the primary trend line here. So it's also good to pay attention to where that primary trend line is on a couple other time frames to make sure that you're not potentially trying to trade into it. And then also, if you are, looking at it, you can also see a reason why you might trade away from it, right? So here we had almost a wick to it. It's probably 10 or 15 pips away from the primary trend line. So if you're looking for sells here on the 1 minute and you notice that this kind of nearly wicked off the primary trend line, it would give you an additional confirmation that you would be, okay, selling away from this area. Okay. And so the reason I brought that up, so here on the 4, if price does come down here, even though I didn't notice another area until down here, I would be a little hesitant here on this 4 hour primary trend line. Make sure I'm not taking trades right into it. Okay, you might see price struggle here a little bit before it does decide to continue down, if it even makes it that far. And so I like to just check out some different time frames, and then eventually I get to my 1. And I took this trade here, so I have it marked up. New York Open on this sniper chart is at 1430, so that was right here. All right, so we had a big candle up right before open. We came down and then we shot up. So I had this area marked up before because it's the London high over here. Okay, I had it as just a straight red line before the market opened. And what happened was is we came all the way to it, but we didn't really break it. So it acted as an area of resistance. So oftentimes what these indices like to do is they like to completely break a previous high and low of a previous market session. And because we didn't get that here, we actually just came to an exact, resistance. And what I mean by break, I mean it has to break by, let's say, at least 5 pips, because this is where people potentially have their stop losses. And in order for the market to liquidate those stop losses and take people's money, uh, it has to do it by breaking through it with enough pips. So I have a feeling that at some point, obviously, we're going to come back up here and we're going to take this out. Okay. But we did come here, we rejected. So that gave me a strong indication that we could come down. And so we did come down, and then we broke back up above the primary trend line, and then we broke down the second time. And we got a cross up here on the stochastic, which is an entry that I like for looking for a sell, is when this breaks back down. So that broke back down on this red candle, okay? Which also formed evening star pattern here on the chart. And we did have a very long wick here on that entry candle, which is not ideal. So I took a half risk. So I typically risk 2%, but I took a 1% risk because I didn't love this wick. But I used a 25 pip stop, which did put me above the top here and puts me behind all the EMAs. The EMAs weren't quite crossed down. They didn't cross down till here. So the trade altogether does not follow all of my rules for being the signature type of entry, which would be, all the EMAs in alignment for a sell. So blue below red, and both those below the primary trend line. And then we get a pull up over the overbought, and then a break back down. Okay, so we had most of it. We did break both EMAs here, actually all three EMAs in this candle. So despite the wick, I entered at the close of this candle, and I was targeting an area that I had marked up already. So this is the Asian session low. And typically I do like to take a 50 pip TP, but because my target was, or because my lot size was half, and I wanted to get my whole pips for the day, my whole percentage for the day, I went ahead and targeted this line, and um, and so I got my whole percentage there anyway. Okay, and I like to trail my stop loss as trades start to move. Goes about 20 to 25 pips in profit. I move into profit, and then I trail based on structure. We didn't really get very much structure here, so one of my next places to trail was just above this wick, and then above this wick here, and then it just ended up hitting. Now, obviously, I could have got around 20 or 30 more if I would have held it. But like I said, oftentimes we see a takeout of a previous session, and then by just, 5, 10, maybe 10 pips, and then we get a reversal and we start heading back the other direction. Now, I don't know which direction this is going to decide to head from here, but that's why I didn't try to hold on to this longer. Okay, I left these pips here on the table. Okay. Now, if we're following the entry that I just described to you guys, we're waiting for, price to come back up here and then break back down. Okay. So that would have been this candle here. And this could have been a loss here because it only goes about 10, 12 pips before it comes out and takes out a stop. If you did have what would be considered a tight stop on US 30, which is 25 pips, would have took you out. Okay. I just didn't take it. I mean, we were on this session already. But then up here, you get the entry again. Okay. And this time it goes around 40. All the way here goes about 45. So definitely some pips in there for you. I'll just mark it up, see what that would have looked like. Now, to me, this was a little too close to this line that I already drew up. Okay. And I'm okay taking more sells. I just want more room so that if this trade goes into profit a little bit, I have some room to trail my stop. So it does go 20. Definitely should have been a break even for anybody who would have got in using this type of entry. And then it goes up and hits where your stop loss would have been. But if you waited for the same exact setup here, would have been this candle here. And then we get to 44. Now, if this was me, I didn't take it, but I definitely wouldn't have taken 44. First thing I would have done is move my stop loss to here after this pullback and it broke. And then once I get this big long candle, I'm quite a bit in profit, 35 pips. So I'm probably trailed in to this line here. Okay. And then eventually it does come back and get me out probably 15, 20 pips of profit. But it does, like I said, it goes a little over 40 and then comes back. At this point, I'm no longer looking for that entry. We get the entry again here, right here, and it would have been good for a few pips. Not ideal because actually this is not the right entry because we have the lines here have crossed up in the up direction. So when the blue is above the red, that means the short-term trend is up. And so even though this entry happened here, it doesn't align here, right? So this is one of our confirmations, and that confirmation is not met. Okay, and it's an important confirmation. So this is one you don't just ignore. I know here I kind of ignored it because blue was above red, but this did cross both EMAs. You know, over here you're above both EMAs, so there's really no entry here. Okay. And then in addition to is you had a couple of these types of entries and neither one of them have been able to get back down to the bottom here. So I'm not super confident that we're going to make it down to this bottom, at least not right away, right? We need more pullback, pull back to the primary trend line, above and back down or something like that. But just hanging around this area, I really, am a little cautious on whether this is going to make it back down here. And so that's why I would have be staying out of these, right? So we're getting one right now. Okay, these lines are just about to cross on this candle. Okay, so if I wasn't being cautious, this would fit the criteria. All right, so guys, when you're trading, you're waiting for this is a really big candle. So if I was expecting to take a trade, I would have something like this on my chart. What I like to do is just have this on my chart. And as I see this candle painting, turn on the timer here. So as I see this candle painting, I can see how many seconds are left in it over here, right? As it starts to get down to, 15 seconds left and 10 seconds, unless we end with a really big wick back up to a close up here, I can tell this is going to be a big candle. I don't know where it's going to close, but, I could tell this is going to be a 30 plus pip candle. And so that I already know that my stop loss is going to be quite large and that I should lower my lot size to what I'm normally using because I typically use a 25. And so I would just either cut it in half or take a third off of it before I take this trade if I was even going to take it. And I would want to at least target behind the high here and add a couple pips for spread. So, I might have a stop like that and then I'd be targeting the bottom. Now, I do like to target 50 pips. And when I take a high stop loss like that, I like to target a 1 to 2 regardless. Okay. But and if price gets near here, then I start trailing my stop loss because I don't know if this is going to be a rejection area, a level of support that it's going to break through or have a big bounce and take a lot of my profits out if I let it come all the way back. Because right now it'd already be at break even. Okay, we're already, 32 32 pips, or we have gone as far as 32 pips in profit. So I'd definitely be about 5 pips of in profit in here on a stop loss. And then, you know, if we get down in here within 3 or 4 pips, I'm trailing my stop about 10 pips behind there, somewhere in here. Let's see if it wants to break without giving us a big bounce. And then if it does break and hold down here, then my stop moves to here, and then we see if it's going to come down here. Okay. But if I'm being honest, I just would have not taken this trade for myself, even though it is definitely profitable already. We're going to switch over to NAS and just have a look here. Nice rundown. Okay, so we had market open at 1430 here, and it just, you know, it ran up pretty well. As far as the signature entry that I like to look for, we're above the primary trend line here. Blue is above red, so we're definitely looking at buys up here. We had a little bit of a resistance level here during London, and as you can see, we came right to it, had a bit of a pullback, and then broke through. But I didn't get that signature entry that I like to look for, which is where we get a pullback and this line crosses down below the blue to the oversold and then back up. We didn't get that anywhere in this move. Now, there were some more potentially advanced entries here, okay, but we did not get the signature move. So I'm not going to go over these secondary type of entries right now. And then we created a new all-time high, right? Which we've been doing quite a bit with the NAS over the last couple weeks. But I've marked this up now. So just so I know if price comes back up here, this is the session high for New York, and it's also the all-time high. I had marked up the low here for pre-New York open low, okay? And so once we came down here, I could have potentially been looking for buys back up, okay? So right here, we get that signature type of entry, okay? But for me, personally, it fits the criteria, but we are too close to a potential level of resistance for me to want to get in this, okay? So as you can see, we would only be, you know, 11, 12 pips, which for me is just not enough space. We did go, you know, 5 pips in profit or so before it turned around. So for me, that just wasn't a good setup. And then we're waiting for it to give it to us again. Now, by this time down here, when it gives it to us, the lines are crossing the wrong direction here, okay? So this is a okay setup under a different set of rules because of this rejection. But if we're just looking at this cross up with everything else in alignment up here, it doesn't fit, okay? Because we're trending down now with these EMAs, okay? So we don't get it again for a buy over here because our EMAs are still crossed down, and it looks like we're just heading down now, right? So I am no longer at this point looking for another buy entry. I got to get these lines to cross back up for me to be looking for buys. So now I'm seeing if this is going to break below this primary trend line so I can begin looking for the sells that it's been starting to show me since here, okay? So we do get the break below right here, and then we get just a really good confirmation here because we get the pullback and it comes right to the primary trend line. And like I said, this is an area of rejection, right? And we get the cross down here on this candle. Now this candle is small compared to this one, so that in itself is not a great confirmation. But because of the rejection here, a little high test bar here, wick on this candle, the cross down here below the primary trend line, it's still a decent setup, okay? So this is definitely a good setup here. And then I would have targeted a 2-to-1 here, but trailed my stop closely when we approached this support level, okay? So we broke right through it and hit TP, wouldn't have been any problem with the trailing stop loss being hit. It would have just went to TP. Now, if you were, leaving your TP open and just using a trailing stop, you probably could have trailed this depending on a strategy there. If you're trailing based on candles, maybe you're trailing here. If you're trailing based on this blue EMA, then maybe you're out here, okay? And if you're trailing based on price action and candlestick patterns, you get a break of this candle with this candle, and maybe you're out here. Either way, very profitable trade. Okay, so now what we're looking at here is another potential, entry for a sell. We did get what looks to be a little bit of a cross down right here, but we got it on a blue candle. This wick caused this bit of a cross down here. And so you got to make sure also that when you're getting that cross down, you're getting it on the color candle for the direction that you're going. So right now we're looking for sells. So this would have needed to be a red candle or followed by a red candle in order for this to, be a confirmation. And I know this doesn't look like much here, but when you're looking at a fresh chart that hasn't painted more candles yet, you can't tell that that's not going to go down. Okay. All you see is that it's crossed down a bit. Okay. Oops. All right. Double click. Lost my stochastic. All right. Well, this is starting to go up now. So what we're looking for is we're still looking for this to come back down to us. Okay. I'm not going to reset my chart real quick because I'm going to lose my markups, but I'm going to show you a little bit of my markups as well. Before I got on here, this is a London low. So I do expect that this will continue down and take this low out. Just something that the market typically does. But just because I say that, and just because that does happen, it doesn't mean that you just hit sell and, have no stop loss and pray that it gets here. That's not how it works. Okay. Once you see the entries that follow the rules, this is an area of interest if it gives it to us, right? Last night also, we had a big gap here. I think there was some earnings report that must have come out for one of the NASDAQ companies. We had this big gap, so I expect that this gap will be filled. It doesn't have to be today, it doesn't have to be this week. US 30 had a similar gap a couple weeks ago, and it took about a week or more to fill. But this would be an area of interest, knowing that this gap needs to fill, okay? And then this is the previous day low that I've also marked up in case this thing keeps coming down. So that's it for me, John. To you.
Hey, thank you very much, Jim. That was excellent. Thank you very much. Any questions on that from anybody? No, okay. Let me just we've only got 10 minutes, so I'll just show gold quickly. I know we got a few people on here that like trading gold, so I will share my screen and show you what we've got going on there. Like Jim says, and like what we should all be doing. So this is gold on the 4-hour chart. And so what I'm looking at is where those areas of interest are, where those areas of support and resistance are. So right here, we have, good indication on the 4-hour of where the resistance is, and we have one here again here that we can't break through. One thing that I like about this sniper scanner is, these little high-low indicators here. And the reason I like those is it can help you identify these areas. So for instance, this area here, if I move that out the way, you can see we're going to encompass these red lines, these red lines, these. So the more of those little levels of support resistance and this zone covers, the stronger it's going to be. And as you can see, you know, we're covering it here, 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 and here. So that's a very, very strong area of interest for our charts. Here we've got just two at the top. Here we've got several down at the bottom. We got one there, we got one there, we got one just above there. But we do see that this area is a strong area as well. And then what we do on gold, you know, gold likes to move between lines. And so on the 4 hour, what I like to do, we've already got this one perfect at the 720. So I'd put a line at the 700 here to show you that's going to be an area. I'll put one on the 680 here. Doesn't have to be exactly. This one is already, the top of that is already at a 660 basically right there. So I won't, well, yeah, let's put one on there anyway. So let's put one that's 660, goes right along the top of that, which it really reiterates how important this level is for us. And hopefully when we go down to the lower time frames, you know, obviously on the 4 hour, you know, this is going back, you know, just this little bit here is the last 2 days. So, you know, going back to the beginning of the week, you know, we started off here at the beginning of the week and we went all the way up here in midweek, and now we're all the way back here at the end of the week. These are important things to know and important things to back test when you're looking at any instrument, but particularly gold. So every 20 is what we want to see on, I'll put this one on here so you can see that's exactly in the middle of that one. We've got one here at 640. And if we put one more down here at 620, look at that, exactly in the middle of that one as well. So you can mark gold up in 20s, okay, 20 pips at a time, okay, because gold does move very strongly between those. When we go down to the 4 hour, we can see again, there's our top line, there's our very, very strong area of interest. Again, this is much more important for us, but we do know we can get back down here again. We can see our levels of support and resistance all in here. We can see our lines at 20, 20, 20, 20, 20. And you can see, for instance, here, look at this. So we came up here, we almost hit that 20, we came back down to this 20. Tried again, didn't make it, tried again, we broke through the 20, and look where we ended up. Right at the next one, that's 2700. That's 20 pips between there and there. We came down, look what happened. We whipped down to this 20 again. We came up, we whipped up to that 20 again. This time we broke through here, but where did we go? To the next 20, okay? And so you see we had a little pullback here. Don't forget, this is all in buy mode here. So we were looking at buys from back here. A buy here, we had a pullback. There was an entry back here. We could have re-entered here as we crossed up through the blue, took that up. There was a pullback here, so we could have got out again. We could have got back in here again. This was giving us a heads up that was coming, but it was on a red candle, so we would have had to wait. That was too small for me, but that's a nice big candle, takes out pretty much 2 of the secondary EMAs, which I like to do. Blue is still above red. Now blue's starting to move away from red. We're in the red zone up here, so this is a strong move up and would have taken us all the way up. Probably wouldn't have got out until maybe this candle going into the white, but it didn't cross the blue, so it probably would have been this one. Again, a big strong move between 2 EMAs, the blue and the red in one candle. That is definitely an exit for me. Plus, of course, around here, definitely here, you fully engulf that candle there. So exiting here or here is the perfect way to get out. You're back in again here, big long wick up in here, and following that all the way up. And you know, once you broke through that 20, we're going to be aiming for this finger on button here. And as soon as that dropped through the stochastic here on that green one, We know we're at a resistance level here, so I would probably have got out there. And then all this is counter trend, so it didn't matter anyway. So go down to the 30-minute. We can still see how important these 20 lines are here and here and here. And now we're back on this very strong area here. We drop down to the 15-minute. And same thing, we're right in this strong area here. So is this going to reject off here? Don't forget, we turned from buy mode here to sell mode here. So really, we're only looking at sells on these lower time frames. 5-minute. Yeah, we're definitely looking all for sells. So this is scalping sells all the way along. And look at this area. We just can't break through this area. So this is where we have to be careful here. Are we going to go up or are we going to continue down? If we're going down, here's our first target right here. Here's our second target right here. So as this breaks down, you know, Bollinger Bands are very narrow. We're not taking any of this. They started narrowing here. We're not taking any of this. Blue is coming up to meet the red, so we're not sure whether it's going to reject here and go up or carry on going down. So nothing we can do here yet. Go down to the 1-minute. Right click over here so we can reset price scale. And again, we can clearly see this is a real magnet, this zone here. The middle line here, the stochastic here is not giving us any clear indication. We did get a counter trend where it jumped off. As you know, I like to put a line on the 50 on the stochastic, because sometimes that gives us a nice little rejection, as it did there, as it did there, as it did there, and as it's doing now there. So I like to add the 50 in there because it does give you kind of a secondary indication of where the trend is going. So this was a nice little counter trend trade. I probably would have actually taken it on the crossover there because I like that. And it bounced off this middle line in the area that we like to see, this area of interest. It did bounce off that line right there. So I probably would have taken that. That was an bearish engulfing. I would have been out there. And now we're waiting. I'm not going to go into the others right now because we're at the top of the hour. I'll stop sharing my screen. Does anyone have any questions or want to go in the chat and ask any questions or have anything else they want to add?